We've been foreshadowing this all show long. So when are you going to reveal the rate not to take?
I'll tell you right now what rate you should not take. Historically, Canadians love a 5-year rate. Right now, don't take that 5-year fixed.
Don't take that 5-year fixed.
Don't take it. Don't take it.
Don't do it, no matter what.
You know, the only people that should be taking it, Todd,
Yes.
are the ones that absolutely cannot take any other product. Like, you can only be approved for this 5-year fix.
Why would that be?
Because it's the lowest rate.
Yeah.
People just are like, I don't know, what is it, a bug to the light? You know what I mean?
Yeah, drawn to the light.
It's a
like
fly to the
moth.
light.
Moth.
A moth to the light. Okay,
Yes.
we're getting there. We're getting there.
Yeah.
Some people love the lowest rate. The lowest rate is not always the best rate. So just remember this. Lowest, not best.
Why?
Lowest, not best.
Explain why.
We are just so trained to say lower is better. Lower is not always better. And I think in this case, it is not better.
Okay, well, tell us why.
5 years is a long time.
Yeah.
Rates are high across the board. It doesn't matter what rate product you're taking. Doesn't matter if it's variable, fixed, 1 year, 2 year, 3 year, 4 year, 5 year, 10 year, 7 year, whatever. They are all high. 5 years is a very long time. A lot of things change in people's lives in 5 years. I think the rates are going to be different in 5 years. And if you break that mortgage early, you are going to pay a hefty, hefty penalty, especially if you break it midterm and the rates go down.
Yeah.
You know what? And I think that's one thing that you really need to think about. People like to set it and forget it.
Mm-hmm.
For those people, maybe that's okay. But I think you will likely be unhappy with your choice in 2 or 3 years.
Yeah.
Because I kind of, what I'm feeling, what I'm seeing, what I'm reading is, you know, in 2 years, 2.5 years, 3 years, the rates are going to be less.
Mm-hmm.
And it's really a commitment when you take a fixed rate. When you break a fixed rate mortgage early, Todd, you're going to pay a penalty of either 3 months interest or an interest rate differential, which is ever higher. The bank is like the casino. They don't lose.
Okay, so bank renewals, when you get that renewal in the mail, a lot of people don't even open the mail. They don't even know they renewed, for goodness' sake.
They don't even know that they got a renewal.
Right. Is that typically a 5-year renewal fixed?
Some lenders will just come out and say, here's your 5-year fixed, here's your 5-year variable, here's your open term, here are the 3 choices. If you want a different rate, you can give us a call.
Right.
Because these are the most common terms that people take. And so many people just take what they are offered.
Yes. Or they don't even know, like you said.
They don't know. They're just like, I've always done a 5-year fix. Done. Check. Send. Initials. Sign. Send it back.
Yeah.
We really, really need to ask the questions. You need to seek the advice of an unbiased mortgage professional, and you need to act early. We typically start getting in touch with our clients 6 months before renewal to talk about the strategy. Yeah. What type of product do you want? What's changed in your life? Ask them a couple questions. But we really start going on the file 120 days prior. That's 4 months prior. We start working on a file because we can secure a rate 4 months prior. So it's really important that we start. And in this business, and right now, time is money. Mm-hmm. Because in an increasing rate environment, you know, a day can make a difference in terms of securing a rate and making sure we have something secured that's going to work for you and for your situation.
I think, though, ironically, through all of this, that people are probably more educated when it comes to mortgages because of the rough ride of the Bank of Canada and all. They're seeing it in the news. They're hearing people talking about it, and they're probably becoming more engaged. Because let's face it, if you've never had a mortgage, why would you know about this stuff? But a lot of people are probably now becoming more engaged in this because of the news.
They are 100% more engaged. And I can tell you, people are listening to our show and they're listening to our podcast and they're listening to our social media because people recite it back to me. They're like, well, this is the advice that you gave. Mm-hmm. I said, yes, that is the advice that I gave. In some situations, the advice changes. And in some cases, the advice doesn't work for this person specifically. But it's amazing. People are becoming more and more educated. And you know what? I love it. I love when a borrower, A, knows what they want, or B, say, I'm thinking about this. Let's talk about my situation, and does that work? Yeah. Because, you know what? It makes it more fun for me, too. Because I think sometimes when you're just doing the hand-holding and people are just so nervous, that can be challenging too.
Mm-hmm.
Because then I'm almost like, okay, if they're so nervous, am I giving them the right advice? Am I asking them the right questions? And I sometimes find when people are nervous, you almost take a step back and be like, okay, they need some time to think about it.
Mm-hmm.
I think in some cases, people just need more information.
Yeah.
And information really is power.
Are you still, you've been a strong proponent of a variable mortgage
Yes.
for a variety of reasons,
Yep.
and you're still in that camp.
You know what? I'm on that camp for some people for sure.
Yeah.
And the difference between where the rates are for a variable and where the rates are for a fixed are getting closer and closer.
Mm-hmm.
Because obviously the fixed rates have been increasing as well. The variable's right for a lot of people, Todd, and I'll tell you who it's right for. It's right for people who might break their mortgage early. And that's a lot.
Yeah. Because the penalty's 3 months interest.
Always only 3 months interest to
Right.
break the mortgage
Right.
early.
Yeah.
It's also right for the people that are able to take that amount of risk right now.
Mm-hmm.
Yes, the Bank of Canada may increase the key overnight rate more. Right now, we're in a plateau situation, right? The Bank of Canada did not increase the key overnight rate when they met earlier this month.
Mm-hmm.
And many economists think we're in a plateau now going forward. Now, the Bank of Canada did say if Canadians start going out and start spending again,
Mm-hmm.
they have no problem increasing that key overnight rate. So variable is right for a lot of people, and it's right for people who might want to take it and also potentially convert into a fixed rate down the road. The most popular rate that we are seeing right now, do we need a little drum roll?
Sure.
Okay, that's Todd's drums. 3-year fixed.
3-year fixed.
I've said this before.
Yep.
3-year fixed is not the lowest rate.
Mm-hmm.
Not the lowest. 5 years the lowest. 4 years less. 3 years more expensive. 2 and 1 year are even more expensive. So
Yeah,
no one's
so-
taking those ones. let's
So,
be
so
honest.
well, I mean, unless there's extenuating
unless there
circumstances.
is a reason
Yes,
for why
that's
you
right.
need it.
Yeah. So the 3-year fixed, why is that rate where it is?
It's a balance between where the rate is and how long it is.
Mm-hmm.
Rate and length. I've done more 3-year fixed in the last 12 months than I have in 17 years.
Wow.
So that's enough to shock you.
Yeah.
And I'm not saying it's just because we're recommending. Customers are coming in and saying, you know what? I do not want a 5-year, even though I know it's less, because I think the rates are going to be lower in a couple of years. Let's do a shorter term.
Mm-hmm.
They don't really like the rates for 1 year and 2 year because they're high. Some of these 1 years and 2 years are like 7%. 6, the 3 years are mid 6s. You know what I mean? It's still not a great rate. People are not happy with the rate. No
Right.
one's excited about the interest rate that they're getting,
Mm-hmm.
but they're excited about the advice that they're getting, and they're excited that they hope that in 2.5 years, 3 years, the rates are going to be less.
And they're always excited to listen to the show. Why wouldn't they be, right?
Yeah, I think they're always excited to listen to Mortgage 101, the advice that we
Mhm.
give. And, this is a lot of this sometimes is my opinion and my
Mhm.
experience.
Yeah.
And we're doing hundreds and hundreds of mortgages a year.
Yep.
So, for example, last year we did over 800 transactions for, $280 million or so.
Quickly, how do people get a hold of you, Clinton?
Check us out online at teamclinton.ca/radio. If you missed some of our show and you want to hear it later, certainly check it out anywhere where you'll listen to your podcast, on Spotify or on Apple Music.
Absolutely. Always a pleasure, my friend.
Thanks for having me, Todd.
You got it. Mortgage 101, your guide to home ownership with Clinton Wilkins and myself, Todd Veinotte.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.